Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, factor and core equity strategist over at Invesco, for a weekly review of the Nasdaq-100. We'll also take a look at the bond market and see what it's signaling in terms of the Fed's strategy with interest rates. Ryan, it's great to see you as always. Let's pull up your first chart here and get a weekly review of what's happening in the Qs.
Yeah, so thanks, Jill. Another great week for QQQM and QQQ, outperforming the S&P 500 and S&P 500 Value Index, trading higher by 3.91%. That's against the S&P's 3.27% return and S&P 500 Value Index's 2.92%. You look over the last week and the return was pretty broad based. I mean, there were only 6 holdings in negative territory across the Nasdaq 100 for the week. The market, I think, took some solace in no bank failure headlines and the hope that the Fed may be nearing the end of its rate hike cycle. But in any case, we wrapped up the first quarter, and again, a great first quarter for Nasdaq 100 amid the turmoil, excuse me, that we've seen. QQQM up 20.73%, with QQQ up 20.70%. That's better than the S&P, up 7.48%, and S&P 500 Value up only 5.15%. So again, a pretty great quarter for the Nasdaq 100.
Right. Well, it's also helpful too that the index doesn't have financial exposure. Speaking of, let's take a look at the bond market here and what's happening with yields. It looks as if it might think the Fed's done with the rate hike cycle.
Yeah, I think so. And you can look really since the beginning of the bank crisis, right around March 8th. That the story has been one of just declining interest rates. I mean, both the 2-year and the 10-year sliding pretty aggressively in the first couple of days, amid that bank crisis. And then over the past 3 weeks or so, we've seen it continue to trend lower. Over the past 3 weeks, since that March 8th date, we saw a Fed announcement of 25 basis point hike. That was back in March 22nd. And we saw kind of Q4 GDP reading come in a little bit weaker than expected. We've seen that coincides with downward revisions from the FOMC summary of economic projections. We saw ISM manufacturing number that came in a little bit weaker than expected. That's the 5th consecutive month of contraction. Today, we saw the services number expand a little bit slower than projected. And then we saw ADP payrolls for March come in less than expected. So, we're seeing treasuries catch a bid here, it looks like, and certainly on the shorter term, with shorter term yields being driven down. And, I think with all of this noise and sort of these economic releases, you look at Fed funds futures, and there are more market participants expecting the Fed to pause in their next meeting in May rather than hike. So, I think to your point, the bond market may be telling us that, hey, the Fed is looking to pause here in this upcoming meeting, and it's sort of the debate of whether or not they're able to engineer this somewhat soft landing, or are we in the throes of a recession?
And finally, Ryan, let's take a look at your last chart here with the we were seeing leadership within the Nasdaq 100. But to your point before, it was encouraging to see that it was broad based.
Yeah, so certainly broad-based. I mean, I think from the equity market, if it is these recessionary fears, then they continue to climb the wall of worry, because all sectors in the S&P 500, all sectors within the Nasdaq 100 were in positive territory over the past 5 trading days. So, and we're seeing that still kind of rotation into your traditional large growth stocks. Outperformance of the S&P 500 driven by overweights to information technology and consumer discretionary stocks, and QQQ's underweight position relative to financials. So sort of this rotation back into tech, into things like communication services thus far in Q1 has continued over the past couple of trading days as well.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.